Hey, welcome to the Closing Beat, everybody. Happy Monday to you. Hope you're having a good day. A little early today. Yep, I'll tell you. If you're fans of Jacob Collier, he is in town. And for Christmas, the team actually got me tickets to go see Jacob Collier. Well, that's tonight. So we're doing this a little bit early so I can get out of here and maybe get something to eat beforehand. I'm not horribly familiar with the guy. I've seen a little bit of what he's done. I've seen, TikToks and stuff, but a whole concert? That should be interesting. Anyways, we are the official financial partners of Drum Corps International. If you haven't figured it out yet, we like music around here. We like to be a part of that. So this summer we'll be all over the United States with DCI and the various corps and parents, directors, etc. We're also like the only advisor that can talk about the markets. I love the geeky stuff that I share with you guys here. I love everything that we're doing. How many other advisors can do that? Hope you'll check us out at jazzwealth.com. We're going to do some cool stuff here today. And oh, by the way, Wine and Wealth last week, if you're curious, if you're one of our clients, we do a Thursday class. We're always going. We're just constantly doing stuff here. The May Financial Focus and the whole Sell in May and Go Away, going through the details there. I had fun with that one, putting the data together, sharing it with you, and I got a ton of questions. So that was awesome. Anyways, let's talk about the stock market here today. You got the S&P, obviously a decent day, no real problems here. I'll teach you a little something in a second. I know I've done this before, but I'll do it again. Let's start with 2 straight weeks of gains. Just sort of eked it out last week, right? 2 straight weeks of gains there. Really thanks to Friday's data. I'm going to go over that here in a little bit. But basically the market, the bond market, the stock market, and a lot of stocks are starting to price in the idea that, hey, maybe we can cut rates a little bit this year versus just a week ago. People were thinking, there's no need, like just stop it, leave it that way. The Fed's saying leave everything like that. I did point out an issue in our Notes from Jazz email this weekend about how this is not necessarily the all clear to just whoop all the way back to highs. I know I mentioned it here, but I'd still be a little bit suspect here that we may start this weird little sideways to down trend. So just something we're going to keep an eye on there, watching the volume and everything as we go up. Remember, contrary to popular belief, a rally on lighter volume outperforms a rally on heavier volume. You'd never think that, but if you look at the S&P and you look at these breakaway little rallies, if there's down here in the background, if the volume is declining on that rally, it actually performs better. We did a study on that. Feels like actually now a couple years ago. Anyway, so that's the S&P for the day. If we look at the NASDAQ here, second week of gains, but second week of 1% gains or greater, just barely last week actually. If you look through the NASDAQ today, a lot of the heavy lifting done by the bigger names, Netflix being one of them. So a little bit of a standout there to give you that 1% gain so far today. Remember, last week and the entire week before, each week only gained 1%. What did we do today? One whole week's worth, well, it's above average, but you get what I'm saying, another 1% gain there. If we look at the Dow, so the Dow puts up 163 points. There's a little trick. Most of the time, if you want to know, is the market going up because of a broad rally, or is it going up because of something, right? Or if it's going down, is something holding the market back, like 1 or 2 individual stocks, or is it that everyone just wants to sell? Well, the way you could tell this, you can look like on TV or whatever. If the Dow is up 163 points, take 10% of that, and the S&P should be up about 16 points, give or take a little bit, right? If you see the Dow up 163, the S&P up 14, you go, okay, that's a broad rally. Everything is behaving normally. That's how it should work. But today we didn't see that, right? You see 160 something on the Dow there. You go over to the S&P, you're like, I don't see 16. I see something different. I see 50, or now 50, right? So what happened? Well, in this case, it's either something in the S&P lifting things higher, which is not common these days thanks to the Dow adding a few of the tech names. So most likely, it's the Dow. Something is holding us back in the Dow. Well, today, it's real quick, just a quick scan. You could find that Amgen, after earnings, decided to pull back quite a bit, right? Almost 4%. And that took enough points away from the Dow to not be up. Well, it took away some of the points from the Dow to not be up as much. The S&P did some lifting there as well. Oh, and then there's also Boeing. Are they killing people? Is that a thing? Did you see that?
I'm not sure.
Yeah, I think Boeing is killing people, and not like in their planes crashing.
It did. Yeah, I think we should just stop talking about
None of that.
Just don't even say the word.
I don't know enough, so I'm not insinuating anything. I happened to catch a couple of those, those reels and stuff, and I'm like, it's 2. Okay. I'm going to look into it because that was one I put it on my list to do like when I get bored. I don't know what's going on there. But nonetheless, Amgen and Boeing, the reason why the Dow was kind of held back just a little bit today. So I want to point that out. We are over the hump in earnings season. So I thought, well, let's see how things are doing, right? If you have stocks that you are invested in, or maybe some stocks coming up with earnings, let's take a look and see how things are going. Here's how things have gone so far. Not just the S&P, we're using everything in this case. And if we look around, we can see the beat rate, right? So what percentage of those companies are beating on earnings and what percentage are beating on sales or revenue, however you want to say it. The number of stocks that are included in these, and then we broke it down by sector. The other thing I wanted to include was the average change for the day that they reported the earnings. So in other words, if they reported after hours, we're counting the next day's results. If they reported before the market opened, we're counting that day's results. So if you look real quickly, you can very easily see consumer staples with the bigger number here, 84.4% with a fairly decent, but not top of the line first day earnings results. So if you have consumer staple stocks, you're not used to seeing them gain so much in a day. Well, that explains why. They're doing really well over there. Communication services, 80% beating on earnings, 76 on sales, has the biggest one-day change. So some of your platforms, I don't know who you guys use, but some of your platforms might give you the ticker symbol, and then below it, it'll say like the sector. If you're looking through your ticker symbols and you see communication services as a sector, you go, wow, those stocks are really going crazy here. Well, now you know that sector is standing out. On the downside, real estate and surprisingly technology. So real estate has the second worst performing earnings beat rate. You might imagine why, right? Sales are good, but we're not making as much. Why? Higher costs, right? Higher borrowing costs. So average one-day change there is 1%. That is the worst out of them. Tech normally is the wild one, either at the top or the bottom. It's very active, a very volatile area. And the worst is going to be energy, and that's just because if you go back a quarter, let's go over here. If you go back a quarter, we're factoring in higher costs here. Remember, it's not now. This is the last quarter's earnings. So we're factoring in the higher oil costs as you look through it. So I just thought that'd be cool, something to look through there to give you maybe an insight as to how things are going. We are officially over, the crest. So it starts off with the banks reporting earnings, then all of a sudden you got tech and everybody, there's a whole bunch of stocks reporting, and now we're on that downslope for earnings season as of Friday. So there you go. Oil, very quiet today, not much to say there. Gold, another 1% gain. I don't know about this here. You got to be careful with gold. Gold likes to have these fits and starts. See what happens? Big move and then quiet. Big move. Is this quiet? I don't know. To me, it's a hold. If you happen to be in gold or have been participating, I don't think you can make any new decisions there. Sometimes I worry that I get too focused in, and you think I'm talking day to day. We're not actively trading over here. So in the midterm, I just think you look at it as, that's just a hold. Let's wait and see what happens. All right, over in the bond market, love to see this, don't you now? All right, what we're going to do is we're going to just extend this trend because I don't necessarily believe in it, but currently investors, buyers believe in this. This is your trend. So it's working out fairly normally here, as technical traders like to look at. Last week's reports were officially a picture-perfect, view of interest rates. So we have rates going lower, bond prices going higher there, because what does the Fed want? Exactly what just happened, right? On Wednesday, Fed comes out, says exactly what they want, and wouldn't you know it, on Friday, they get exactly what they want. We have unemployment rate ticks a little bit higher, 3.8 to 3.9%. We want to see that. We don't want it to go to 5, right? But we want a slow uptick there to keep things a little bit, keep inflation at bay, hopefully. And we only added 175,000 jobs in April. That's down from 315,000 jobs, but they were expecting like 225, 235, somewhere in there. That's awesome. We're adding less jobs, and there's a slight uptick in unemployment. It's the perfect balance between a reason for rates to fall, but not to worry about the economy. You know what I mean? That's what the Fed was looking for. Like we need something to tell us that, we're going to get some help with inflation, but we don't want to necessarily crash everything. So right now, it's kind of going exactly the way the Fed wants there. So I'm just pointing that out. If that's something you want to look at. Hey, who won Guess the Dow here? Let's take a look and see what's going on.
Your winner last week was John R. John R is our first non-client winner, and I think 2 weeks now. So he's going to get the $100 gift card. So congrats to him, John R.
Okay, that's not a client. We do have a John R. that is a client, so I was thinking
Maybe a couple of them.
it's not him.
Not him.
Maybe John R. thinks of like, hey, let's just work with Chaz. You know what I mean? Maybe. Also, on our little thing next to Guess the Dow, we're missing 2 guys.
I'll have to check with the team and get back to you on that one.
That could be the one there. Well, congratulations, John R. winning Guess the Dow. $100 gift card coming your way. And there was a lady, I think, that said she won and never heard. Did we get with her? Oh, she wanted to credit the account. Okay, different way. All right, I love it. You can play. No strings attached. We don't play games there. It's just something fun that we like to do here to keep you paying attention. Hey, let's look at some stocks in the news. I'll take your questions if you have any. I know it's early, so there may not be as many people hanging out with us. That's okay. Apple. There was a lot actually with Apple. The biggest thing that got the attention was Warren Buffett selling off 13% of the stock. Remember, his cost basis is next to nothing. So the man wanted to take some profits because he had a little bit of a bad trade on that last one that he talked about, where he said we lost a lot of money, right? He was honest, but that's all it is, right? So Apple really not affected by that here today. That was the main news. Sherwin-Williams, Barron's was pretty active with them over the weekend with a little bit of a write-up there, and they give you all the stats and everything, and basically at the end of it they go, there's plenty of good news for Sherwin-Williams going forward. They were pretty bullish on it. We happen to own it, so that's fine. I'll take the attention. Tyson Foods, the active one here today, which is funny. A lot of the analysts that had their so what happens basically is right before earnings come out, or the second they come out really, a lot of the analysts will publish their reports saying, we expect a positive outcome or positive reaction to what we see. Here's everything we see. Or we expect a negative reaction. And so, I read through these things. Every one of them said, we expect a positive reaction to earnings results. And they were wrong. It just happens every now and then. 5.6% to the downside there. Prices overall for them shown to be stabilizing, but slower growth. That was part of the concern there. And at the end of the day, when you get sort of down to the bottom where we're looking at margins on their balance sheet there, margins in beef and in pork, negative operating margins there. So that could have been what people were focused on. All in all, it wasn't bad. What happened actually beat most analysts' expectations, but nonetheless, it fell today. I don't have anything better for you there. And then Spirit Airlines. Here's a cool one. You want to see something cool? All right, kind of running on fumes here. Total capacity up 2%, meaning the availability to put a butt in a seat up 2%. Ticket prices down 7%. So there should be more butts in the seats, and they now have more seats to put butts in. All right, so simple breakdown there. The trouble is, we did this before, where I said airlines will break down the actual profit margin per seat per mile that plane flies. This is not me making this up. They actually do this. So every plane that's out there whipping around the skies, they're calculating the profit per seat that they make. That's pretty intense. The trouble is, remember Delta, I think, was at 12 cents. 12 cents per seat per mile. I think they were at 12. Anyways, here's where we stand with Spirit. This is not the best of news if you're a Spirit person. All costs included, they have a negative profit margin per seat per mile of 1.7 cents. Okay, you can't do that for too long, right? We're flying people around. We're not necessarily. Now we're burning money. If you take out fuel costs, that turns it positive, but you can't take out fuel costs, right? The reason that that's plotted is because what did we just show? And come back over here and we go, well, all right, if oil prices were lower, would their total margin per seat per mile be higher? Yes, it might be positive. So they spent a lot of time, if you read through any reports on that, they spent a lot of time analyzing that, because if we can't solve for this and at least break even until we figure out what to do, then Spirit Airlines has a bit of a tough go ahead of them. So that's something you won't see anywhere. Well, because of that, the stock's down 10%, because we don't know that oil is going to stay low long enough for them to burn through all the higher cost oil that they bought and get some cheaper costs. Remember, these guys are big. They have whole futures departments and stuff. Actually, they have companies that handle it for them now, but That's how that works. Anyways, Vistra Corp, as a utility company, is going to be taking the place of Pioneer Resources in the S&P. Remember, they got bought out by Exxon, so they're pretty much done. Right? That deal is closed. I believe it's done and over with. So the S&P comes out and says, well, we need somebody else to put in there. We're going to replace it with a utility company that, wouldn't you know it, is doing quite well. And then Adobe. Oh, this was also in Barron's. So Adobe, Barron's wrote up a whole thing on them and then said the biggest benefit and the continuing benefit is going to be from AI for Adobe. So that was in the news there. If all this is too much for you, you'd like to learn some of the basics, go on over to Haley's channel. Haley's channel is Doe Straight on YouTube there, and she goes over the basics, get everybody fired up, start with very simple things, quick, short videos. Hopefully you enjoy that. And yeah. All right, so I'll take your questions if you have any questions. In the meantime, while we're waiting, tomorrow morning, Disney's going to be the focus. And then in the afternoon, you got EA Sports. All right, I forgot about them. EA Sports, Rivian, and Wynn, right? Because remember, we just had MGM, and they said, oh, Vegas, it'll be fine, but Macau's where the action's at. Well, Wynn is more in Macau than MGM is. So if Macau's doing that well, a lot of people expecting, maybe that'll turn out well for them. Other than that, you know, you have Occidental Petroleum. That's basically it, right? Rockwell Collins, maybe. Something in there. All right, let's see if you have any questions, and then I'll be on my way. Does anybody know who Jacob Collier is? Does that ring a bell to anybody? Dustin, is it mathematically possible for the debt interest payment of us, the U.S., to reach $2 trillion in less than 2 years if, Jesus, I look into it with you, but is it possible? I'd have to look into it. I do not know that off the top of my head. Pedro says, what is the best place to find stocks that have analyst ratings over, say, 85% accuracy? Well, a lot of the name brand platforms, you should be able to run a scan. Like if you're not, like Robinhood doesn't have it. You're not going to, Webull and these online ones, they're not going to have it. If you use like a name brand platform, what is now Schwab, the Thinkorswim platform inside of it, the big names. Interactive Brokers, you could even use. TradeStation, I think, is still around. So they'll have a scan feature, and you don't have to scan by price, you can scan by rating. And so that's probably the best place to go. That's free and included with your offering. There are sites that you can pay for, I believe. They cost money. TipRanks would be the most popular one, but that won't be free. They may have some free version, but it may not let you search for things like that. Yeah. Be interesting to see how a stock's value trade within these random time periods after a CEO buys shares. I've seen people do write-ups on that. I mean, that's an interesting thing to look at. And conversely, when they sell, right? Like Jamie Dimon selling shares. Was that a month ago or so? What tends to happen after that? Because, Jesus, so far he's about break even. Pedro, Dustin, how are we performing against 2008 historic post-peak? Any similarities? 2008 post-peak, how are we performing after that? Why would we relate it to that? It was an interesting question. How are we performing? We're performing better than that, but what are we comparing? Like the rate of change against 2008 after that whole rally started again? So that's a pretty broad question. It's a good one, though. Yeah. Andrew says the question would be where to hide money and hedge if American rating gets cut and or default happens like Russia did in the 90s. It gets really difficult. You become a commodities player. You become a global bond trader at that point. If you just, I don't know, use iShares or something. If you go to like the iShares website and you go, I want all the ETFs that represent each country. We're doing good over here, but there's a lot of countries you may go, okay, a little bit safer over there. And you may be more interested in the bond portion, their government bonds over there, as well as commodities. And currencies too, it's just not my thing. I can't speak enough about that. Yeah. Not a question, but he says, hey, that darn Costco is up and going again. For the last so many years, like buying dips on that has not only been fruitful for capital gains, but also those one-time dividends that they keep throwing out there. So, yeah. Yep. Does Lowe's have any chance of going higher after earnings? Yeah, there's always a chance. There's definitely a chance. Let me see if I can find any stats for you. And I remember we used to do that. We could go back to something like that where we look at the stats of that. While I got you for a second, let's just see if I can pull it up, because it's not tomorrow. If it were tomorrow, I'd already have it ready for you. But by chance, is it there? 1 second. Nope, here we go. Come on. It's going to mess with me. I'm sorry. We will be back at our regularly scheduled time tomorrow. Lowe's beats 72% of the time on earnings. 54% chance, if you look back through its entire life, there's a 54% chance that it will be positive on earnings day. That's not the number you want to see. We'll be reporting Q1 earnings, and Q1 earnings is the worst of all the quarters for it to be positive. So only a 38% chance when they report the first quarter earnings that the stock will be positive. Average move is about 1% to the downside. So hopefully you're ready for that. Yeah, Mr. Bishop's got it. You know what I mean? You buy the bucket of rice, build one of those little bunkers, you know, sit there and eat rice and beans and such. Honestly, I would just end it. Like, I'm not sitting there doing that. All right, that's enough. Let's think positive. You know, in the meantime, all we can do is think positive. Hey, I'm going to wrap it up here and be on my way. Thanks for joining us a little bit early here today, and enjoy the rest of your day or evening.